I don't know, but, you know, she may be dipping her toe into these ugly waters.
Well, I wouldn't say ugly because the NASDAQ has turned around. We were down 3.5% at the open. So what does that tell you? That means that people are going in to buy the discounts. And, you know, as I said to you, there are distortion effects at play because we see a lot of short covering since we are close to the end of the month, right? And a lot of these names, I'll call them speculative tech names, they have been down, 70%. So you're closing off those short contracts. Also, options expiry, which we know expiring. A lot of people are using options these days to play the markets, and that's why you see this rotation back. So look at the Rokus, the CrowdStrikes. I want to show you some of these really speculative names that have been beaten down so much. Now, obviously the big tech ones, the big five, you see that discount that's attracting a lot of individual retail investors. Now, the electric car names are also very interesting to me as well because they are getting bids. Rivian, which we know has been a hedge fund favorite. So the Soroses of the world, the Dan Lowe's, they've been buying in, and apparently attractive to a lot of people when you're sub 60 on the stock, because you have to remember that this was a $100 billion electric car maker on $1 million in sales, and it was closer to 120 just a few months ago, right? And then Tesla, which actually, you know, has some bullish news and I would say tailwinds this morning on that second Shanghai plant that's set to at least start building that second Shanghai plant that will take production capacity in one of the largest car markets, if not the largest car market in the world, to 2 million each and every year. And you know that Shanghai has been a reason why Tesla has gone up to $1 trillion in valuations.
Tell me about ARK, Cathy Wood and ARK. ARK Innovation. I see it's a minor leagues bounce there.
Well, I mean, that in a down market like today, with all those headlines of a Russia invasion in Ukraine, I think that's pretty much outperformance. So what it tells me, if we can just bring up some of the retail favorites, so the ARKs, the AMCs of the world, I threw in some of the high flyer, what we call high momentum names. The fact that they are getting a lift today tells me that the retail investors, and as I mentioned to you, this time is different from the last bear market we saw in March 2020 because there are new investors at play, those that were armed with their stimulus checks. So we're talking about tens of millions of new accounts that have been open, and these are the names that they tend to flock to when they see discounts.
And they react very quickly.
Yes, as bargains.
They know how to use technology to jump in where they might be at work or something, but they can still trade their account. And there's millions of these people.
Tens of millions of new investors. Also, I want to bring up the oil names if we can, because there was, I think we need to go through these headlines, in that there is no U.S. oil supply cushion. You saw the EIA numbers, right? So we're looking at crude stocks in the SPR down to the lowest since 2002, right? You have to go back. And then also Midwest crude stocks, lowest since January 2015. Cushing down to the lowest since September 2018. So that tells me that we are definitely on our way to $100 a barrel for West Texas, if not 110. And what does that mean for the oil majors that have outperformed this year, last year? I see it going higher from here.
I agree with you. And if President Biden sanctions Russian oil and gas producers, cutting off the supply of oil and gas on the world market, prices go even higher for oil. I think you might be looking well above $100 on that.
At least. I think Bank of America was calling 120, actually.
Is that right?
Yeah.
I saw crude, West Texas Intermediate, I saw that at 103 this morning, backed off to 96, but that's still going strong.
Right.
Tell me about the cryptos and Bitcoin.
So talk about high momentum. And you have to remember that crypto trading is highly leveraged. I would imagine that 80% of trades are leveraged, meaning that you just don't bet the $5. You bet 5 times 5. Now, here's an interesting thread that on social media from the FTX $20 billion founder, Sam Bankman-Fried, who's very influential, as you can imagine. And he tweeted this. So there's a split between the algorithm traders and also the retail traders, the individuals. And he says if you look at the algorithms, you look at the data, and they decide based on BTC, which is Bitcoin, it should be 80% correlated to the S&P 500. That means it's not digital gold. It trades along with the broader stock market, right? So it's no longer an inflation hedge or a hedge against bad global government policy. It has a beta of 4. Which means that if the S&P moves 1%, Bitcoin moves 4%. Does that make sense to you?
I understand.
Okay. And then war breaks out. So you can imagine that cascading momentum sell-off that's taking place in cryptocurrency. So, yeah.
Gold is the real inflation hedge at the moment.
At 1940, right?
It's getting close to $2,000 a share, an ounce, I should say. 1922 to be precise.
But it's interesting that with Bitcoin, you know, we talked about how it's plunge or it's crash. We're still above that 29,000, right?
Yep.
And the fact that there's still more money chasing cryptocurrency than there is in gold, by the way.
And cryptos are following stocks.